Let's get a wrap of the week in markets with Leanne Jones from Bell Direct.
It has been a very volatile week on markets this week. We have actually seen 2 up days and 3 down days, but unfortunately after today's losses we have in fact closed the week down 2.2%. We were watching that 53-52 level where we did in fact drop below that today, and unfortunately we have wiped out all of the gains that we did previously see in 2014. Unfortunately we are now down 0.7% for the year so far. Having a look at some of the factors that have really weighed on the markets this week. Firstly, we have continued to see weakness coming through from overseas markets as investors have continued to worry about the Fed increasing those interest rates sooner than expected. Of course, there has been a lot of concern coming out of China, particularly around their growth outlook, as some of that recent soft data has pointed to a potential slowdown in the Chinese economy. However, on Wednesday we received that flash manufacturing read-through, which was actually better than expected. So I do think that indicates that a lot of those concerns are potentially being inflated. We also saw that iron ore price dropping to a new 5-year low of $78.60, and we now are in fact down 41% so far this year, and that has certainly added pressure on that materials sector. It was the worst performing sector this week, down 2.9%. And finally, we have continued to see that Aussie dollar falling below 88 US dollars. During the week we saw the RBA Financial Stability Review coming through, where we did actually see some commentary around concerns about Australia's booming property sector and of course the risks that poses to a lot of the financial institutions and those big banks, and as a result we have seen that financial sector coming under pressure this week. Again, one of the worst performers, down 2.5%. If we have a look at the only sector that traded in positive territory this week, it was healthcare, up 0.3%. And as I said, it was the only sector in the green, and I really think that indicates that a lot of the money flowing out of the market is being reinvested into some of these growth stocks such as healthcare and IT. Having a look at the week ahead, of course tonight it will be all eyes on that US GDP data, where we are expecting to see a potential revision upwards in GDP growth. On Tuesday we have credit data due through in Australia, which of course will be closely watched, particularly after the RBA's commentary around the property sector. On Wednesday we have retail sales due through, where we are expecting to see some potential gains, and of course we have China's official manufacturing data coming through, which again will be watched very closely, although we are expecting this to come through relatively unchanged in comparison to the August figure. On Thursday we have trade balance data and as well as building approvals through in Australia, and finally on Friday we have US employment data coming through, which again will be another big focus. So overall I do certainly think in the short term the share market will remain very volatile, and of course the Australian market is still vulnerable to any potential falls in that Aussie dollar and of course that iron ore price as well.